like a lot of people are thinking that if I'm going to go raise money, like the investor wants to make as much as possible, right? Which is true in the early parts of your career. But once you get to a certain point, there's also Warren Buffett's thing, which is don't lose money.
My experience has been, and look, starting out, if you had money for a down payment on a house and qualify for a loan, we were partners.
Mm-hmm.
Not today. The more money my capital investors have, the greater the concern about losing money.
Yeah.
It is far greater than people like, and people go, I don't understand that. Well, the only part that's true there is you don't understand because you don't have that kind of money.
Right.
When you're dropping $10 million in, your main concern is not making as much money as I can. You worked for years or decades to create that $10 million.
Mm-hmm.
The most important thing is that money doesn't get lost. And what they love in our model and what we teach is that now I'm not just the Wall Street guy doing a fee, not caring if you make money. Only way I get paid is if I make you a bunch of money. So my emphasis is on sustainability and profitability. And people go like, John, you do all this creative real estate and all this stuff, it's like, look, is how I view it, how I was trained. As the founder and CEO of a private equity company, my sole job is to reduce and mitigate risk. The exact opposite of what most people would think, which if you think about it, that makes a lot of sense because most people don't understand the game at a high level.
So in starting your fund, this is in 89 when you decided to leave
Yes.
Wall Street. So in 89, you started raising capital to buy real estate.
Yes.
So money first, then real estate.
Yeah. You and I have talked about this many times, Steve. I started going to real estate trainings in the 70s and 80s.
Mm-hmm.
And essentially the training today, I'm sorry, it hasn't changed at all. It's the exact same regurgitated information over and over again. And almost all real estate education is like, let's pretend that the money isn't the problem. And let's figure out all these ways we can do real estate without money, which is cool, but that's not how it works.
It gets the eyeballs.
What they're doing is since they can't fulfill the need button, they try and push the greed button, the get rich quick. And you know this and you teach this. Look, real estate investing is work, hard work, always has been, always will be, like anything that's substantial.
Mm-hmm.
You have to
If
work.
it's worth it, you're going to have to work for it.
Yeah, you got to have your model that works, and do that. And so, and look, subject to existing financing, mirror reps, cool tools. The problem is, in a normal decade, they only work for 2 or 3 years. So obviously, there's exceptions, but we're going to look at the overall market. Obviously, the last 3-4 years, why would anybody sell to you on a subject to take over my financing and walk away when they could just call any iBuyer who'd write them a check?
Yeah.
I mean, it's not a very viable technique during those markets. And it's unfortunate, just so many bad apples were in the barrel, but I mean, the whole wholesaling and the assignment industry has been massively affected by all this legislation that's now going from state to state, and it's just going to come more and more and more because they were so abusive and their record of performance was so horrid because they were being taught you don't need money to do real estate, which is a lie.
Yeah.
You do. So what I did with my company and the education that we do today is like, look, instead of pretending and lying to everybody, why don't we just tell the truth? The most important component to real estate is capital and the ability to borrow. You can do it without those. It is extraordinarily difficult and hard. And to build a sustainable portfolio without money, you can do it, but it's ridiculous.
It's particularly, right now, at this exact moment, it's a lot harder right now to do real estate without money than it was a few months ago. Because a few months ago, you didn't need money. You had a buyer.
Right. Now you don't.
Right now, you're in a precarious situation if you don't have access to capital.
Yeah, now we're in a more normal market, which has a couple ways it could go. But right now we're in more normal. In the run that was the last few years, those happen every 15 to 20 years. They're ludicrous. They're insane. If you own a bunch, you just smile and go, "Wow, our net worth went up millions of dollars. Isn't that nice?"
Right.
And we didn't do anything. But it's not how you build a portfolio.
No, it's not.
And so what we focus on is, look, understanding how to raise money is the most important skill set, the gift that you can give yourself. Because if you know how to raise money, whether you want to do real estate or businesses or whatever you want to do, if you know how to raise money, you can always get money to do what you want. If you don't know how to raise money, Every time the market hiccups, you're there. And look, if your model requires the market to go up, you don't have a freaking model.
Yeah.
You have a model that will fail every single time because the market's always going to stop going up and then you're stuck.
Right.
And so what we're seeing, just seeing the beginning of, and you and I have talked about this, we're going to see this over the next couple of years. So many operators who thought they knew what they were doing are going to fail one after another like dominoes, like they do every single time the market downturns.
We're already seeing